I know there's more questions here, and they were really good. And I did lump some of them together, this one particularly, because these are all around the theme of the value pricing, the best questions to ask, the most common value drivers, how to start the conversation, how to frame the conversation. And this is where I'm going to give you some real strategy. Realize that the customer never buys a product or service. They, by definition, the customer buys satisfaction of a want. We buy things or services in order to accomplish something, either to get a job done, peace of mind, like insurance. There's all sorts of motivations, but it's never, I don't buy life insurance because I want a life insurance policy in my desk drawer, right? I'm never going to need it. It's the impact it has on my head that if I die, my family's going to be taken care of. So when you think about value and pricing, price is what we pay, but value is what we get. And all value is subjective and indivisible. And what I mean by that is, a bottle of water in the desert is worth a lot. If you haven't had a drink in 4 days, you'd give everything you had for it, right? It have a very high value. But that same water at home, washing your dog, is going to have a lot less value. And if your basement is flooded with water, now it's got a negative value. Well, think about that. The value went from very high to negative. How do we explain that? Accounting can't explain that, because accounting simply takes a transaction that was consummated at an agreed upon price and records it as equal value on both sides of the two parties' ledger, right? The buyer and the seller. But that's just bookkeeping. Value explains the economics, right? When I buy something, I spend $5 on a flat white, I'm only buying it because it's giving me more value than the $5 I gave up. In other words, transactions only can happen if the buyer and the seller disagree as to the value of the item. There has to be disagreement. And once there's disagreement, then you can arrive at an agreeable price. And I know that that's a really counterintuitive point, but this is how economists think about it, because pricing is how people divide up the value, right? The only reason I paid $5 for that flat white is because I valued it more than the $5 I gave them. And the only reason they accepted my $5 was because they valued my $5 more than they valued the flat white. And so, and how do we know this? Because in any transaction, there's that double thank you moment. You hand over your money, they hand you the item, you say thank you, and they say thank you. Shouldn't one of us say you're welcome? No, because we both think that we're profiting from the transaction. Both the buyer and the seller profit. So value has got to be a feeling. It's not a number. I don't know how many of you have an Apple product in front of you, an iPhone or a computer maybe that you're on. Why'd you spend a fortune on Apple products? They're really expensive. There is a lot cheaper, Samsung and others out there that you can get for a lot cheaper. But when you ask people, why do you buy an Apple? It's easy to use. I love its design. It works. It's flawless. There's all these things, but they're all feelings. Nobody's done an ROI calculation on a Samsung versus an iPhone. That's not how rational people make decisions, right? It's a feeling. And I think that's a big problem that we confront as accountants, because we love our numbers. The other thing about time is we think time is value or time is a cost. It's not, it's neither. We're not, our customers aren't paying us for our time, and we're not paying our employees for their time. Because if I was just wanting to buy time, I'd go find the homeless person on the street because his time is really cheap, right? No, I'm buying what they can do, the results that they can produce. And so time, when you think about it, is really just a constraint. Steve Jobs, Bill Gates, they're subject to the same time constraints we are, right? But they have a different business model than we do. They don't think they sell it. You can't sell a constraint, right? You can't sell time. You can't hoard it. You can't exchange it. You can't store it like inventory. You know, so it's even the wrong frame to think about a business model. And there's no such thing as value billing. So when people and firms say to me, "Oh yeah, we value bill," I know they don't know what they're talking about, because billing takes place in arrears and pricing takes place up front. So the other thing, I've already explained the bottled water, but this is the components of the transaction. There's customer value, there's price, and there's cost. And of course, the difference between the price and the cost is the profit. And we as accountants understand that. But have you ever thought about what's the difference between the customer's profit and the price they pay? Well, that's their profit. And you know what? Accounting doesn't account for this. When I buy that flat white, the coffee shop's going to book it as $5 debit credit. And I'm going to go home, book it on my, home accounting system as $5, right? Entertainment cash. And it makes it look like the world is in perfect balance. Debits equal credits. Well, I'm here to tell you that in the real world, debits don't equal credits, because this is why transactions happen. Not because of the equality of what we're exchanging with each other, but simply because of the inequality. I value the cup of coffee more than $5. They value my $5 more than the coffee. Bookkeeping doesn't account for that. GAAP doesn't account for that. Debits, credits don't account for that. And that's what we're missing. And so we've got to spend time on that green bar. How do we focus on that green bar? Because the customer wants to maximize our value. We want to create more value for them. And that should be our focus, and hence the value conversation. So when you look at this in a chain, and you'll see this chain in the book, hourly billing is the top bar, where we start with a service, we track how much time goes into it. That's the cost. We take that cost, we mark it up with some profit, level, some profit margin percent. And then we hope and pray that the price is less than the value to the customer. Well, look where the customer is in this chain. They're at the end. So value pricing inverts this chain and says, no, you start with the customer. You ascertain the value through the value conversation. Now, again, value is not a number. So this is not precise. It's not going to be scientific. It's not going to be a formula. But then the value is what sets the upper bound of your price. The price has got to come in lower than the value so the customer can make a profit. And then here's the thing that I think really spins accountants' heads around. It's the price that justifies the costs that we can incur as a firm to do the service profitably at a profit that we can live with. Notice that in the top chain, the cost determines the price, but in the real world, price justifies costs. Because think about it, if the top chain explained the real world, why would any business ever go bankrupt? It doesn't take rocket surgery to put a price above our costs. Your 8-year-old can do it. Businesses go out because they don't produce things of value. But look where value is in the chain with cost plus pricing, hourly billing. It's at the end, along with the customer. We need to put that front and center. And so the firms that have made this transition, they follow the bottom row. And in the book, you'll see that I lay out this 8-step process to do it. I'm not going to go through all these, but that first one is the most important and the most challenging and the hardest, and that is having that value conversation. It's stepping back from the scope of work, diving in. Here's what we need to do. Here are the 6 things we need to do to clean up your books, or get your taxes straight, or get the work papers to the accountant, or whatever. No, you got to step back, just like in that banker story, and talk about what is it that you're trying to achieve? What's the end objective? And so the value conversation is everything, because remember, we're professionals, and a professional is someone who is responsible for achieving a result rather than performing a task. One of the things that I really, really dislike about the billable hour, and the timesheet feeds into this, is everything is turned into a 6-minute task, 10-minute task. right? I've got to do the reconciliation. I got to do this. I got to do the financials. I got to do the review, whatever it is. We have all these tasks. It's not what the customer cares about. The customer cares about the result, not the task. If I want a bunch of tasks done, I can hire a day labor, clean my gutter, walk my dog, mow my lawn. But I go to a doctor, an accountant, a lawyer for an end result. Help me get through this divorce in the most painless way possible. Help if you're a LASIK surgeon, help me get better eyesight, and get rid of my glasses. I'm looking for some type of transformation. And when you're billing by the hour, you're not focused on that. You're focused on all the tasks and all the hours and efforts. And that's just the wrong focus.